Welcome back to Stock Predictor, the channel where we simplify smart investing so you can build wealth with confidence. Today, we're breaking down something that most people never truly understand: the smartest order to invest your money, step by step, in a way that actually grows your financial future without unnecessary risk. Whether you're just starting out or looking to optimize your existing strategy, this video will show you exactly how to put every dollar to work in the most efficient order. Let's start from the very beginning. Before you begin investing anywhere, you need to understand the foundation of healthy financial growth. Most people think investing starts with buying stocks, but real investing starts long before that. It begins with stability. Imagine trying to build a house on a shaky foundation. It doesn't matter how fancy the structure is, it won't stand. The same is true for your financial life. Before your money can grow, it needs protection, balance, and structure. The smartest first step is creating a basic emergency fund. This is not about making money, it's about preventing loss. Life happens. Jobs change. Health issues come up. Unexpected bills hit hard. If you don't have cash to cover those shocks, you're forced to borrow money at high interest or sell your investments at the worst possible time. An emergency fund is your shield. It protects your investment journey from being interrupted. You don't need a huge amount at first. Even a small starter fund of $500 to $1,000 helps stabilize your situation. As you begin earning more, you'll eventually want a full emergency buffer of 3 to 6 months of expenses, but starting small matters most. Once you have your emergency buffer, the next smartest step is paying off high-interest debt. Think of high-interest debt as a hole in your pocket. You can put money in, but it keeps leaking out. Credit card debt especially grows fast, often faster than any stock market return you could make. If your interest rate is 18%, 22%, or even higher, paying off that debt is the same as earning that percentage guaranteed. No investment can consistently beat that safely. Clearing those debts gives you a clean path forward and dramatically improves the power of every dollar you invest later. With your financial foundation built, we move into the true investment order. This is where your money starts working for you, and every step builds on the one before it. The first place your investment dollars should go is into tax-advantaged accounts if you have access to them, because taxes are one of the biggest expenses investors face, and avoiding them legally gives your money more room to grow. If you have an employer who offers a retirement plan match, such as a 401k match, that is one of the best returns you will ever receive. If your employer matches 50% or 100% of your contributions up to a certain amount, you take that match first. It's free money. It's guaranteed growth. It's a return you cannot get anywhere else. After capturing your employer match, the next logical step is maximizing tax-efficient accounts like a Roth IRA or traditional IRA, depending on your income and tax strategy. A Roth IRA is especially powerful for long-term investors because you pay taxes now and withdraw tax-free later. That can save you thousands, even hundreds of thousands over a lifetime of investing. Tax-free growth is one of the greatest advantages an investor can have. Even if you're young and not earning much yet, starting a Roth IRA early can put you ahead by decades simply because compound interest thrives on time. Once you're contributing to retirement accounts and capturing your match, your next step is building consistent investing habits. The market rewards consistency more than timing. Most people try to jump in and out of stocks, hoping to buy low and sell high, but that almost never works. The real power comes from investing regular amounts over time, what we call dollar cost averaging. This strategy means you invest the same amount at regular intervals, weekly, bi-weekly, or monthly, no matter what the market is doing. When prices are low, you buy more shares. When prices are high, you buy fewer. But over the long run, your cost averages out, and your wealth grows much more smoothly. With consistent investing set up, the smartest order continues by focusing on diversification. This is where many beginners make their biggest mistake. They pick a few individual stocks and stay overly concentrated. Even if they choose great companies, they carry unnecessary risk. One bad quarter or unexpected event can wipe out gains. Smart investors spread their money across several sectors and asset types. Index funds or ETFs are the best tools for this. They allow you to own hundreds or even thousands of stocks at once for a very low cost. Instead of trying to pick the next winner, you ride the entire market's long-term growth. Historically, broad market index funds have outperformed most professional investors over decades. Once your core investing is in place with diversified funds, the next step in the intelligent investment order is automating everything you can. Automation removes emotion from the equation, and that is one of the biggest advantages you can create for yourself. Humans make terrible investors when emotions are involved. We panic when markets drop. We get greedy when markets rise. By automating your contributions, you make investing something that happens in the background of your life without stress. Every month, money enters your investments without you having to think about it. Over time, this simple habit can create life-changing wealth. After automating your core portfolio, the next smartest step is considering additional medium-term investments, things like taxable investment accounts where you have more flexibility. These accounts are perfect for goals that are 5 to 10 years away, such as buying a home, starting a business, or taking advantage of future opportunities. Here, you can still invest in index funds or ETFs, but you have more control over when you withdraw. These accounts don't have the same tax benefits as retirement accounts, but they also don't have early withdrawal penalties. They give you freedom and optionality in your financial life. Now that your long-term and medium-term investing strategy is established, you can move into the phase where you optimize your investments for higher returns. This step is optional, but it's where experienced investors begin exploring sectors, themes, or individual company stocks that they believe in for higher upside. This might include tech stocks, renewable energy, AI companies, large-cap leaders, or even undervalued opportunities in the market. But it's very important to remember this: individual stock picking should come only after the foundation and diversified core are fully set. This part of your portfolio should remain smaller, maybe 10% to 20%, so that it can grow without putting your entire financial future at risk. The next step in the smartest investment order is understanding how to rebalance. Over time, some investments grow faster than others. For example, if your stocks outperform your bonds or other stable assets, your portfolio might become more aggressive than you originally intended. Rebalancing means adjusting your investments back to your chosen risk level. It's like maintaining a car. Small tune-ups keep things running smoothly. You don't want to check once every 10 years. You want to check once or twice a year and realign your strategy. This step protects your profits and keeps your risk under control. After optimizing and rebalancing, the next part of the smart investment order is increasing your income streams. Many people believe investing is only about managing your existing money, but the truth is wealth grows fastest when you invest more over time. That's why creating additional income sources, whether through side hustles, skills, freelancing, or career growth, becomes a powerful step in your long-term financial plan. The more income you generate, the more you can invest, and the faster your wealth compounds. Even an extra $200 or $300 a month invested consistently over years can dramatically change your financial future. Once you are generating more income and investing larger amounts, the next phase is learning to minimize taxes on your growing wealth. As your investments grow, taxes can chip away at your returns if you're not careful. Smart investors understand how capital gains taxes work, how to harvest losses, how to choose tax-efficient ETFs, and how to time withdrawals strategically. Small tax-smart decisions made early can save you enormous amounts over a lifetime. Financial experts often say, "It's not how much you make, it's how much you keep," and that's absolutely true in investing. The next step in the smartest investment order is preparing for long-term life events. Investing isn't just about wealth, it's about building a secure life. At this stage, you consider things like insurance, wills, trusts, legacy planning, and protecting your family's future. These decisions might not feel exciting like stock picking, but they are essential for long-term financial health. Finally, after building a complete and stable investment system, the smartest ongoing step is reviewing and refining your plan. You don't have to change your strategy often. In fact, keeping things simple usually works best. But you do need to stay aware of your goals, your risk tolerance, and major life changes. Every year, set aside time to review your investments, contributions, and results. You don't need to obsess over hourly or daily stock market moves, but you should maintain clarity on your long-term direction. When you follow this entire order, starting with stability, moving through debt payoff, capturing tax advantages, building a diversified core, adding automation, expanding into medium-term investments, exploring high-return opportunities, optimizing taxes, and reviewing regularly, your financial life becomes structured, strategic, and powerful. You're not guessing. You're not hoping. You're not gambling. You're building wealth intelligently, step by step, with a system that supports you no matter what the economy or stock market is doing. Most people try to skip steps in the investment process, and that's where they get into trouble. They jump into individual stocks before paying debt. They chase the next big trend before creating an emergency fund. They try to make fast money instead of building solid foundations. But real wealth isn't built through shortcuts, it's built through order, planning, and consistency. When you understand the smartest sequence for your money, everything becomes easier. Your investments grow smoother. Your risk becomes manageable, your confidence increases, and your financial independence becomes a realistic future instead of a distant dream. If you're watching this video today, you're already doing something most people never do. You're learning the actual process behind wealth building. And that knowledge is going to set you apart. The smartest investment order is not about being perfect. It's not about being rich already. It's about taking each step at your own pace and letting time, discipline, and strategy work together for you. Remember, every dollar has a job, and when you assign each one in the right order, your money becomes a tool that builds your future instead of holding you back. Start small. Be consistent. Follow the sequence. Protect your foundation. Capture your match. Invest regularly. Diversify broadly. Increase your income. Optimize your taxes. Review your plan. And let your wealth grow naturally. If you found this video valuable, make sure to subscribe to Stock Predictor for more smart investing guidance, powerful insights, and actionable strategies. Your future is built by the decisions you make today, and you're already on the right path. Thanks for watching, and I'll see you in the next video.